The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Just after 9 a.m. Tuesday morning, we got about 24 minutes to go until the start of trading, and market slightly in the red just in the last few minutes, though. We trade down about 10 points. You see where we were coming into the opening bell. We had markets in the green. S&P's dipping a little bit lower. We're down by 10 points right now. Got a little geopolitical action going on in South Korea right now, as they're talking about martial law. That's usually what you're hearing out in Banana Republic style. But nonetheless, it's going on. You got markets dipping a little bit lower right now. You get the NASDAQ 100. There's your acceleration on the 9 o'clock bar. We're up at 21,220. We're down right now 58 points, or about 0.3% in the NASDAQ 100. You jump over to the Dow, barely in the red by 18 points at 44,890. And the Russell this morning, negative by 3 so far. We jump down to Bitcoin. On Friday, above 100,000, we're trading at 95,000 right now, 95,033. And you jump over to crude, trading at 69.13. Quite the resurgence from yesterday. I was driving around last night. I think it was 303. No, it was early this morning, actually. I was out already. 303 was the price of a gallon of gas. I said, not bad, not bad. Gold contract catches a little bit of a bid this morning, up by $14 right now. We jump to notes and bonds. And check it out, a little bit of higher price and lower yield right now. You're talking about a 10-year at 4.18. What's going on with yields, right? Check out that bounce we got going on. Higher price, lower yield, 4.18. Now we look at where we were in September. On a Fibonacci level, the 382 would bring you to about 111.21. We're only 10 ticks away from a 382 bounce of the run we had. And that run culminated with the election. November 6th brings you down to that price point, and we've now almost gotten a 382, and that would bring you right back to where we originally came on October 10th. So we'll see where we go. But nonetheless, yields. We got higher price and lower yields coming at you. We'll talk about cuts in a moment with the Fed. December 18th, almost 2 weeks away. You jump over to the dollar on some lower yield. We have price backing off a bit, and we're at 106 again. For you currency traders out there, you talk about volatility, man. Friday, we're at 105.6. You make it all the way up on yesterday to almost 106.80, and just like that, we're back again to 106.15 as we have lower yield. We have a weaker dollar, and that's putting a little bit of a bid into the gold contract at 26.74. Now, gold has been particularly volatile recently. We're doing pretty well. Outside of that one acceleration you got above 2,700 up to all the way up to 28.01. Okay, we've been shopping around at this 2,700 price point since about September. Now here's the kicker, right? Check this out. So where are we in the gold contract? We're right where we were on September 24th. Okay, remember that, September 24th. Do you know where this was on September 24th? Do you know where the 10-year was? The 10-year was all the way up at 114.18. And to put that in, I'm going to pull up where actually on about September 18th. Yeah, we had a yield in the 10-year around that time of 3.7, something like that. I got September 18th. I got the yield of 3.7 right now. So the point being is that we've had yields rise from 3.7 to 4.2%. Okay, over that time. And remember, this is going back to the gold contract, and this is making a case for the argument of how strong gold has been. All right, you go back to September 24th, when gold traded from 26.47 to 26.89. September 24th, remember that one, all right? And then you go back to yields that we just talked about, and then we're going to jump to the dollar. September 24th, yeah, it's right here. We were at 114.18. We were almost pushing 115, 114.29. All right, and then you look at the dollar on September 24th. Look at that, man. The dollar was down at the doldrums of 100, 100.60. Maybe we hit a high of 101. So think about what could happen in gold. Gold is right where you were on September 24th right now, and in that time frame, we've had the dollar go from 100 to 106. Well, if you keep your eye on the dollar, what does that mean could happen with gold? Now, it can go both ways, okay? Just like we've seen certain relationships and correlations like the dollar and gold not exactly hold up, right? Longer term, you get dollar strength, you're going to get gold weakness, okay? But there are other things that work in the short term. We're in an extremely important time right now. We have a new administration come in. We're dealing with the Federal Reserve that's trying to cut rates, Markets saying, hey, I don't think you can just yet. We're still dealing with potentially inflation and a hot economy right now. In theory, longer term, you're going to pull back in dollar, all right? That could give gold a bid. It's not guaranteed, but keep your eye on it because we got to pull back in that dollar. Gold has held up extremely well. We're pushing 2,700 right now. And yeah, we'll see where we go. But nonetheless, on a weekly basis, it was quite a pullback in the dollar last week. We're slightly positive, but trading at 106.15 right now on that dollar. All right. And yeah, let's talk a little bit of South Korea. So they're talking about this one in the den, and nobody really knows what's going on when these things happen. Even in the U.S., you see us fight over it. All right, both parties, right? South Korea's Yoon declares martial law and emergency address. Through the declaration of martial law, I'll rebuild and protect a free South Korea. Adding the decision was inevitable. It's politics, folks, and it's power. The defense minister ordered a meeting with the military's top commanders. And yeah, you jump around across the board here. You pull over this one from CNBC. Anti-state activities. The opposition of anti-state activities. Now that can mean anything, right? Yeah. Pro-North Korean forces and protect constitutional democratic order is what we're talking about there. So keep your eyes peeled, and hopefully that settles without too much volatility in South Korea, but they are dealing with some volatility right now, that's for sure. Okay, and as we come into this first break, this is what we're going to come back and talk about. We're going to talk some rates. Yeah, on the morning that we have the 10-year coming down to 4.17%, 4.18 right now technically. We'll talk a little bit of Federal Reserve. Expectations build that the Fed will ease by a further quarter point is what we're going to talk about when we get back, folks. And yeah, we got that 10-year, man. Pretty remarkable that in September we were at 4.7, right? What was our low there? I was taking a look at it. Our low was at about 3.65, made September 16th, 3.65. You went all the way up to 4.45 on November 13th, so almost a full percentage point in the 10-year. We backed off a bit. We're sitting at 4.18%. Come back, folks. We'll talk some Fed. We'll talk some interest rates. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&P's negative by 4 right now. You see that drop-off we had about 10 minutes prior to 9 a.m. We're trading just below the lows we made at about 6 a.m. Eastern Time, trading at 6,058, and we keep our eye on yields, as I was talking about right now. You got the 10-year sitting at about 4.18%. And, yeah, we've been keeping our eye on what the market thinks is going to come down the line, and now it's at a 3-to-1. It used to be a 2-to-1. Now, the market is pushing a little bit higher, and that's why, you're seeing yields dip down a bit, and the market is now pricing in that they think we're going to get a quarter-point cut come December, 75.25. The market is rarely wrong in this one, okay? The Fed will usually give enough guidance to not surprise the market. That's not what they want to do, okay? And now we're at a 3-to-1 probability that they will cut by 25 basis points. Now, it's so interesting. I keep going out, and is that that's the December meeting. Market thinks we're going to come down to 4.25%. And by June, though, the market thinks there's a 20% chance that we stay there. Right? So even if we get the cut 2 weeks from tomorrow, the market thinks that there's a 50% chance that we just get one cut over the next 4 meetings after that. Yeah. Now you go out to September. Okay. Check it out. If the market thinks that we get a 75% chance that we're going to 4.25% in December, and these aren't quite tail risks. This is just saying who the heck knows by September, but look where it is. It's saying that there's a 75% chance we're at 4.25% by December, and then it's saying 6 meetings later, so 7 meetings from right now, going out to September 17th of 2025, the market thinks that there's a 35% chance that we stay or get one cut over the next 6 meetings. Those are big numbers. Okay, not a lot of cuts priced into this market right now. When you talk about the expectations, and folks, I kept talking about it when this market was at lofty levels. I mean, I love this CME FedWatch. They should have ones that go back 3 months, because if you could see the odds, folks, of what this looked like when the market had a 10-year up here. Okay, and I say up here in price, as in a 10-year sitting at a yield of, and let's just pull it over. This is the chart I was looking at going back to September, okay, on the yields. When we were priced in 3.66, folks, the market was way ahead of itself on cuts, okay, way ahead of itself on cuts. When we got down to 11.15, the high, when we were at 4.45%, okay, we had probably pulled too many cuts out of the market. We're trying to find that Goldilocks scenario of what's appropriate on a longer-term basis. And right now, the 10 years at 4.18. You can see that we were as low as about 3.66 September 16th. You got all the way up to 4.46 on November 13th. We've pulled back to 4.186%. And now we have, though, okay, and this is where, if you want to figure out, I mean, it's so interesting. For those that are not in the market, and I know that's not who I'm talking to. If you're in the den, if you're listening to me on YouTube right now, all right, you have an awareness. You know what's going on. Most people don't, though. And most people, right, you hear that the Fed is going to begin cutting. They do begin cutting, and rates, what do? They rise dramatically after they begin cutting because all the cuts were already priced in. And that's what happened here. All the cuts were already priced in. Well, at least they're not priced in anymore, right? And that's why I go over that CME FedWatch tool. They're not priced in anymore. They might be priced in by December, okay? But you go out to September right now, and the market is pricing in 2 further cuts after the one that we may get in 2 weeks. And that was always kind of the logic. The logic was, hey, you know, the Fed's got a lot of room right now. We're sitting at 4.5%. We probably don't need to be there. We can make the argument that you can come down to 4.25% and still be restrictive. The problem is when they start getting down to a 3 handle, it's harder to make the argument that they're restrictive, right? What if the natural rate of growth in this economy is 3.5%? And we got AI through the roof. We got deregulation. We got tax cuts. Okay, what if the natural rate of growth, the R star, is as they call it, and nobody really knows. It's a theoretical number, right? The Fed's always trying to find it. The market's trying to figure it out. What is the natural rate of growth in the economy where the Fed can be neither restrictive or accommodative? That's what they're trying to get to. They don't quite know where it is, but when they're in a 3 handle, they're probably a lot closer than when they're in a 4 handle. And right now, you go all the way out to September, and the market's only pricing in 2 cuts, maybe even 1, after the meeting in December, which means over the next 6 meetings following the December meeting, the market's thinking we get 1 to 2 cuts. That's a pretty decent pause, okay? So we'll see where we go. And yeah, that's a perfect segue. We jump over to, not that one, not that one, this one. This one from the Journal, talking about construction. And, you know, a couple of people were talking about after the election, right, that, you know, my dad was not a Trump fan. He would not have been happy with him getting elected. But the first comment was he would have loved what was going to happen to the economy. Not quite the case, folks. It's not quite that simple. There's diverging goals here when you have economic success and then you have tariffs and immigration crackdown. Those two can battle. And we're going to see where they sort out. But this one's an interesting one from the Journal. And this is where, you know, you talk about as a home builder. All right. Yeah, my dad was not happy for the policies, let alone the person of Trump. OK, we're not getting political. This is straight out the policies. Yes, public companies are going to get tax cuts. We've seen the acceleration in their share prices, not always indicative of the economy and jobs. OK, but when you talk about home building, you talk about tariffs, and then you talk about an immigration crackdown for the workers in that industry. It may be a tough one. We saw, for reference, if you weren't watching, right? You watch D.R. Horton. Yeah. Look at D.R. Horton since the election. There's the election, November 5th, November 6th, actually below that price point still, trading at 167. Right? Lennar. Where's the election? November 5th is the election. You trade higher, you trade lower. We're basically right where we came into that, not higher. Okay, versus you pull up a chart of the S&P right now, and yeah, you see that breakaway. Okay, not the home builders though, and this is part of the reason why. We'll talk about this. We're going to come into the break, back to the opening bell, but yeah. And this is, it's interesting. I'm in Central Florida right now. I'm in Lakeland, and I've talked about for many years when you have, we had a development, folks. I think it was 1,700 houses. 1,700 houses getting built, and it was by Lennar and D.R. Horton, and I think one more potentially. Such a big development, they had to team up, the home builders. One of them didn't want to do it by themselves. They had to team up. And we'll talk about this because they go into some of the numbers here, talking about the home builders, talking about, 13% of the construction industry, undocumented. We'll see how it goes. We'll talk some of these numbers. We'll talk some of the tariffs that they're dealing with. We'll be right back, folks.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&P right now, basically unchanged. We're negative by less than 1 point right now, trading at 6,061. You're talking about record territory across the board almost. NASDAQ 100, we dip a little bit lower, down by about 0.3%. Dow catches a bid, up by 44. You see that spike on the open to 44,954. And the Russell, positive by 1. We jump around. Some of the Magnificent Seven. Apple shares catches a bid yesterday. This market finished strong. Today, basically flat. Apple slightly in the red. We jump over to Amazon. Did you get your Cyber Monday sales, folks. I got a few things on there last night. I did. Amazon down about 0.4% right now to 209.75. You jump over to Meta shares. Quite a day for them yesterday, huh? How about up almost $20 Meta yesterday? Today, up 70 pennies. Holding on to the gains from yesterday, up by about 0.1%. Tesla shares. Yeah, they dipped lower yesterday, down by about 2% right now. Off $7, trading at 350.23. We check in on Bitcoin. Bitcoin shares down 1.8%. We check in on MicroStrategy, particularly volatile, trading at 365, down about 4%. And we get back to the conversation, talking about some of those tariffs. So everyone gets all heated up, man. Darth, my man, it's okay. We're not making declarative choices one way or the other. And this is where, in the long run, how that happened. Thanks, Al. Not sure how that muted, but we'll start over. You can have both of these, right? A strong economy, a strong immigration platform, policy, etc. But where I struggle is the Trump rhetoric that we're going to have the most best, beautiful tariffs ever. It's going to be great. China's going to pay the tariffs. That's not the real conversation. And that's the part that is frustrating. That the conversation is, it's worth the pain that we might have to go through right now for the benefit of the longer term. And I'm not making that argument, but that's the argument, okay? These tariffs are going to matter. Now, you can make the case, but on a longer term basis, they're necessary. That's a real conversation. But in the shorter term, you better believe it. You better believe that that's possible, okay? That it's going to be a tough one. And look at some of these numbers and look at the charts of the home builders when you look at it. They did not rejoice at lower taxes, at deregulation, okay? They did not rejoice. The market is always right. Watch the charts sometimes. Now, as I mentioned, it is interesting. You talk about the dollar, you talk about yields, okay? This is the Journal, okay? This is not MSNBC. This is the Journal talking about the implications that tariffs and immigration are going to have on the housing sector. You want cheap houses, right? That's not coming just yet, folks. It's not going to happen just yet. We'll see what happens. All right, but they talk about one gentleman here, George Fuller. He's also the mayor of McKinney, Texas. Now, he's a fan of the immigration crackdown, but maybe just not all at once, is I think how we put it here. But nonetheless, you talk about undocumented workers making up 13% of the construction industry, more than twice that of the overall workforce. All right, not surprising that we know that that's in there. On top of that, you got tariffs. Now, how about materials? And this is where my dad was bringing in some stuff from China, okay? Let alone the materials that you're dealing with, like steel, wood, etc. 7.3% of home building materials are imported, okay? Softwood lumber used to frame buildings coming from Canada now has a tariff of 14.5%. That might be going up to 25, okay? And how about $43 billion America imports iron and steel from Canada? Yeah, how about that one, right? And then you look at cement. How about 512 million of cement from Canada and 254 million from Mexico in 2022? All right. Gypsum, which is used to make drywall. We're all familiar with drywall, not familiar with gypsum, but nonetheless, you're going to become familiar if you're a home builder. Yeah. That price has jumped 50% since 2020, and both of them imported from both countries, Mexico and Canada. Right? It's a big one, man, when you talk about it across the board. So you have the president and the chief executive of the Associated Builders and Contractors, which endorsed Trump, okay? Enthusiasm very high because of the prospect of deregulation. Federal and government regulations add more than $90,000 to the cost of a new home. And folks, I see it through my dad. I'm seeing it right now. All right, we're dealing with a lot, for sure. It is quite a process, but follow the home builders charts. It was quite a binary choice between Trump and, I was going to say Biden, and Harris. And those stocks didn't move. So yeah, you know the tax cuts are coming, right? You know deregulation is coming, and those stocks aren't moving. Pay attention to that one, folks, okay? Because the proof is in the pudding there, as we know. And where are they? Unauthorized immigrants in the labor force. Florida, Texas, California, Nevada, Washington, and then you get a trickle in the Northeast. Massachusetts. Yeah, New Jersey, Delaware. So it's something to be aware of. We're going to see the reality versus the rhetoric. You're going to see the ability for a few caveats to be in there at a certain point, okay? And no, I'm not saying at all that they can't afford them, Darth, right? They're going to get some tax cuts. They might be able to afford them, but you're talking about 13% of an industry's workforce. And it happens in one way or the other, folks, okay? What's going to happen is it's either going to be margins or they're going to transfer the cost to you. It's one way or the other. When you have increased costs, you have to either transfer those costs onto consumers or you have to eat those costs, which eat into your margins. We've seen how companies are not too keen to eat into margins if they can keep selling. And the home builders are some of the only games in town right now. When you talk about the amount of houses that they're putting out, they have the ability to buy down some rates potentially, and we'll see where they go from there. We talked about McDonald's yesterday, right? McDonald's taking a look at their conundrum that they're dealing with right now in terms of more. They have an amazing margin right now. They're dealing with 43, 44, 45% margins. But guess what? Costs are going up. They can't even service some of the lower echelon consumers in terms of on the pay scale, and they're still holding on to 45% margins. So they're not ready to give it up. Yeah, and what are they doing? They're transferring those costs onto consumers, which is part of the inflation that is in this economy, and that is going to be one of the elements that persists when you have lower wage workers, undocumented, how that proceeds, and then you have tariffs on top of it, and the construction industry is a ripe one. And so just be aware of it. Those houses. Housing prices holding up relatively well the last couple of years, depending on where you are across the country. But I'll tell you, in Florida, yeah, they haven't gone up in a couple of years, folks, but just holding on to the gains that they had over the 2 to 3 year period coming into that, it's a remarkable acceleration in housing prices, and we've held on to them, even at rates where we are. And look at this market, holding on to gains. We're negative by 5, but we're sitting at lofty levels with the S&P right now. Negative by 6 points. We're trading at 6,055. Come back, folks. We'll take a look at some other equities moving this morning. We'll be right back.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets trailing off a bit. S&P's now making session lows. We're off by 7 points right now. NASDAQ 100, we're off by 33. A little bit of divergence. You get the Dow dipping lower. We were approaching 45,000 on the open. We're now at 44,800. You get the Dow off 100 points. Russell off by 5. And yeah, we jump around to some of the other equities that are moving this morning. So, what is it? I can't believe I said X. There's this. Saying, what is it? I knew it was a one-letter symbol. X. So U.S. Steel. Speaking of commodities, Trump said late yesterday he's going to block the purchase of the steelmaker by Japan's Nippon Steel. A deal was reached in late 2023. Been a hot topic item, and you got U.S. Steel down 8%. We take a look at the weekly. Look at the volatility. Right, up to $50. We've trailed off since then. You were as low as 27 back in September. You're at 37.75 right now, and it looks like that deal. I'd be surprised if it gets done with everything in focus. You jump over to AT&T shares. They're up by 4%. Whoops. Going back to short-term chart for AT&T, some decent numbers. How about $18 billion in free cash flow? Let's pull over this one, man. How about $18 billion in free cash flow in 2027, talking about 5G and fiber expansion. Yeah, that is a big one. So the company said its detailed 3-year vision for the business to expand its 5G and fiber across the U.S. is going to bring us them, not us. I don't own any AT&T. $18 billion. They expect to reach more than 50 million locations with fiber by 2029. And yeah, they got 28.3 right now. No, that's interesting. So they pass by in terms of where they're already technically wired. There's 28.3 million households they can reach. They lower the end of the 2024 adjusted earnings per share, but the market likes the free cash flow, man. And they like the outline, the growth for 2025 to 27. And nonetheless, they are trading higher today. You got AT&T shares catching a bid. You're up by 4.2% with the market in negative territory. You jump over to CVS. They were higher. They give it up. They got a little bit of an upgrade from Deutsche Bank. Yeah. To a buy from a hold. Earnings will recover and top consensus estimates. But guess what? The market doesn't believe it with CVS giving it back. And you take a look at this chart. Yeah. Look at this thing, right? Watch out below. The only thing I'll say is, yes, you're coming into this area that you had lows back there in 2019 of about $52. You bounced from there last month. It was right where we were. Right? Look at the technical bottom this made, man. You had bottoms out here of 51.77, and we hit 52.71, so within $1. You're trading right now at 59.19. But tough go around for CVS. That chart not indicative of any strength whatsoever. You gap lower early in the year in May, and you've just been chopping around at this price level. We put it back on a daily. You can see just chopping around between 55 and 60. We were up as high as 67 back in early October. Man. Yeah, so we jumped to Super Microcomputer. Now this one's interesting. They were the ones they weren't putting out. Yeah, they weren't putting out their books. Their accountant had stepped down. They got a new person on the books. And you're up by 3.6% today. They accelerate higher yesterday on the news that a special committee of the board of directors said it found no evidence of misconduct nor any substantial concerns about the integrity of the senior management or audit committee and their commitment to ensuring that the company's financial statements are materially accurate. Well, that is a little bit reassuring. But remember where this chart once was. Remember the run-up you had. Remember that we're not even sure we can believe the financials just yet. And you had their accountants stepping down twice. You had their accountants stepping down. All right. Some other equities moving this morning. When we jump over to Zscaler. So their numbers last night, you were lower. A little bit of a bid on the open. You're still down by 4.1% right now. Yeah. Revenue nearly matched estimates. And that's not what the market was looking for. They were looking for bigger numbers than the estimate there. They did have better than expected adjusted earnings and revenue in the fiscal quarter. But when you're talking about the forecast for the quarter coming up, not quite what they thought. They match it, but not quite the deal. And yeah, you jump over to Tesla shares again. So it is interesting. Musk, he's not going to get his $56 billion. And I don't think even Trump can jump in here unless Trump just wants to give him a bunch of cash from the U.S. Treasury. I don't think that's going to happen. But I don't think he can overrule this one, and it's not going to happen. Now, remember, when they had the vote come out, right? So this pay package got overturned. I believe they were appealing it. They went to the public for a vote. That vote was meaningless. This was talked about. It was one thing that the Tesla, the Elon Musk legal team was going to use to try and argue, and it was a decent argument, that the shareholders approved of it. Now, $56 billion to be CEO, folks. Yeah, I mean, the rewards are there, but boy, oh boy, that is not an owner's package. That's just a package. And the argument is he created enough wealth to make it worthwhile. The problem is, if this is the standard now, everybody's upset at CEO pay. Think about the pay for CEOs for companies when you're running a $4 trillion company, which is Apple is almost is, okay? Apple is a $4 trillion company, potentially. We're at what, 3.5, 3.6, something like that. 3.6 trillion right now, okay? Apple's got 15 billion shares outstanding. It's up $1 today. Apple has added almost $15 billion in market cap today. Do you think it makes sense that we give their CEO a 10% take of whatever he's rewarded shareholders? You can make that case. You could say, hey, Tim Cook deserves $1 billion today because he added $15 billion in shareholder value today. It's just a quick glimpse of how that conversation can shift in a very bad manner when you start talking about that you're worth it because of the value you add to shareholders when the company is worth so much, because you have to remember that you have other people that can do that job. The argument is Elon is his own man, and that is true. But $56 billion is probably a lot of money to be CEO, and I don't think that benefits the market overall. When you're talking about a company, okay, when they were making that claim, now, yes, Tesla right now is about $1 trillion, I believe, 1.1 trillion. But you have to remember, folks, when this was coming down the line, they were a company that was valued at 400 to 500 billion. And so Elon was asking for a market cap, 15% of the market cap of the company to be handed to him at that time. It's an obscene amount of money. And I think in the long run, it's a good thing that it didn't get approved, even if you believe in Elon. We'll see where we go. But nonetheless, Tesla down a percentage point today, down with the market. That news not really hitting things. He's not going anywhere in Tesla right now. He's got the administration almost in the palm of his hand, I want to say. And that's not going to last for long. We'll see how long Trump's okay with that. People saying that Elon has the administration in the palm of his hand. It almost feels like it. But he's not going anywhere for Tesla, man. As the regulation's going to be light, and they're going to be putting AI vehicles on the road, but Tesla down by 1% with the market. All right, folks, we got one more session of the program. We're coming back. We got markets in the red. We'll come back. We'll talk a little bit of dollar. We got the dollar today pushing 106.18. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps, all the markets slightly in the red. You jump over to that dollar index right now, up about 338 ticks. You see sitting just above 106 right now, and we take a look at AT&T. So AT&T, we talked about them earlier in the program, right? They're talking about $18 billion in cash flow. Now, interesting piece from the Journal, talking about the spin-offs. They gave up on the media business, and the stock likes it, man. You can see why some of these equities, right? You go into other businesses, you make acquisitions. Usually the company doing the buying, right, they trade lower. The company being purchased, they trade higher. It's because you're spending money on the hope of a future payoff that's not always guaranteed. And that's exactly what happened here. And this is the chart I wanted to show. How about they buy DirecTV sometime in 2015. They buy Time Warner sometime in 2018, and they finally figure out that that was a mistake, and they sell them both, and they're finally starting to take off right now. Now, they are the number 3 player in the chase for U.S. wireless customers out there, but they're going to return $40 billion to shareholders in the next 3 years. They're not going to be spending that money on Time Warner or DirecTV anymore. And they're going to stake out an additional $10 billion over that span to give it flexibility to make acquisitions, pay down debt, or spend on other initiatives. Now, yeah, but they're not going to be spending it to the likes of Time Warner or DirecTV when they came in there. Yeah, since April 2022, shareholder return of roughly 50% as the market has accelerated there. Yeah. They were at $289 billion market cap in 2019, and yeah, they're at 164, but they've seen a little bit of a resurgence. And there's your acceleration. And keep your eye on AT&T. I think the ship's been righted there. You're coming up against an area of resistance, though, right? You look longer term. This $24 area, that was the lows in 2014. That was the lows in 2015. That was the highs of 2021. But keep your eye on AT&T, man. They've got quite a turnaround. I was reading this Journal one, and look at that run since the middle of last year. All right, folks, stay tuned. We got our man Basil Chapman. He's coming up next with the Tiger Technicians Hour, folks. Stay tuned. Have a great Tuesday. I appreciate you kicking off your day right here at TFNN, and I'll see you tomorrow. Have a great one, folks.